Hey traders, welcome to Charts and Coffee. We got the whole gang here. Yes, we do. All right. Good morning to our YouTube, both the Simpler Trading YouTube channel and my YouTube channel at Raghee Horner, and there we go, Simpler Essentials room. All right. Good to see everybody. Happy Thursday, everyone. We're taking a look at, we're in the second half of the month. This is, as I've been talking about, I was looking back on the last handful of free videos that are on the Simpler Trading YouTube channel. And this is the season for the buyers, onward and upward. And then most recently, the do not watch list, everything discussing the fact that there is a tendency in December for general movement higher. Has it been a smooth climb? Oh gosh, no, it has not. And also, has it been a climb that's necessarily reflective of things that we saw were bullish in November? That's not really been exactly the case either. However, if the plan is every week, if not every day, to reassess what the relative performers are and to reassess which symbols are in a trend and which trends have been steady, then we're going to land on bullishness in consumer discretionary, communications, even XLP recently. Technology has been surging as of late. And my gosh, gang, the NASDAQ hit an all-time high yesterday. These are not bearish things, or as I like to say in our room, follow the trends versus do I hate my money? Many times, and this is the inversion theory that I think Charlie Munger made really popular. If you want to do something well, identify the three things that would guarantee you don't do well, right? So in trading, if someone says, Rog, how do I become a good trader? Most people are looking for a set of steps or a template to say, do this, do this, do this, and make money. And while that can be true, depending on your strategy, there's lots of strategies, tactics, steps, depending on whether you want to be a trend follower or a mean reversion trader or a range bound trader or whatever it may be, right? But I have found over the last 3 decades, 2/3 of that has been teaching traders as well as trading myself along with that. Counter trend trading, max debit risk, and adding to losers. You want to blow up an account more often than that, do those 3 things. Okay, if I know those are the 3 things that are going to challenge me to building an account, don't do them, right? Don't do them. And it's no different than if we're going on a diet. Lots of ways to put on muscle, lots of ways to lose fat. But if someone said, hey, these are the 3 things don't do. Don't eat late at night. Don't have sugary foods, whatever, right? Earn your carbs. Those are pretty basic things, like avoid those things. So maybe at this stage in the year, we look back on the last 12 months and say, hey, what do I need to avoid doing in 2025? We use that inversion theory. Again, that Charlie Munger, I remember reading about that some time ago, use that inversion theory and say, these are the 3 things that I will absolutely not do in 2025. And that leaves you open to trying other things. Maybe it's a new indicator. Maybe it's another strategy. Maybe it's just another, philosophy on trading. Maybe it's a different market. Maybe you're going to start saying, I kind of like stocks, but I want to try stock options. Maybe I've been trying Forex or futures and I want to add options on futures to that, whatever it may be. What's going on with this crypto thing? Maybe there's a day trading approach to crypto that I like. Doesn't matter, but just follow the 3 things you shouldn't do. Speaking of that, as we go into next year, one of the things that I'm going to share with you all as we go into Q1 is I'm going to go back and look at the last quarter. Recency bias is a thing. So when I show you, and I'm going to be working on that over the next week, I'm going to pull up my trades viz on for October, November, and December. Look, I could pull up the whole year and I could pull up, say, Q1 and identify Q1. Q1 was a monster year in 2024. It's not really in any way the rest of the year's behavior. That was just a straight up uptrend, as reminiscent of 2020 as we had seen in years. So Q1 was its own little world. Q2 was probably the most challenging month of the year. In fact, it was the single month. This was a single quarter where I had the 1 month of a negative return. I did not grow my account in April, I believe, of this year. It was the 1 month where it just didn't work out and I was down. Now that was after 3 months where we were up nearly 280%. and I had a down, I think 11% month, right? Got to talk about losers, right? So we move forward into Q4 and things once again are not quite as good as Q1, but they're really reminiscent of probably what we're going to see in Q1 of 2025. And barring any significant sector rotation, we're seeing as we're ending out the year, the Federal Reserve is continuing with their accommodative monetary policy. All that means is they're going to cut rates in stocks like it. Accommodative, lower lending rates, lower borrowing rates, right? Weaker dollar, which is not a bad thing, and we have a 98.1%. This is fully discounted at this point, gang. 98.1% means that Fed Fund futures traders have looked out ahead across the economic calendar of Friday, Monday, Tuesday, and Wednesday before 2 p.m. and said, of the things that we know, right, the data that will be released, nothing is really at this point swaying us to, even if that was a miss, we're going to get that rate cut. That's what that 98.1% means. We're going to get a rate cut on December 18. Stocks are going to like that. Is it any coincidence that the NASDAQ, which is the most sort of, if you're thinking about alpha, you're thinking about return, you're thinking about more risk and higher volatility, is it any surprise that as we've crossed a threshold to that next quarter point cut, the NASDAQ's punched up to an all-time high? Probably not. And sure, some of that is going to be powered by Google and that news about Willow. But remember, for the strength in Google, we've been seeing some weakness in other tech stocks. So it can't just be a Google, Willow, quantum computing thing, because this has been consistent weakness in AMD, certainly chop, if not bearish chop in NVIDIA. Cisco's having a hard time getting out of its own way in the wake of that. So it's more than just a couple breakouts that are leading us to that all-time high. A lot of it has to do with the macroeconomic, those tectonic plates that move really slowly, but when they do, it's earthquakes and volcanoes, right? So let's not ignore that. They're slower moving, but they're longer impacting. All right, that said, I'm kind of looking for some questions here, but if you have any, feel free to type them on in. But barring that, let's jump into what else is going on. This morning, we looked at ES, we looked at NQ, and two sectors that have continued to be quite strong, XLK and XLC. XLC punching up to a new high. Why are we buying the dip in things like XLC? These are open positions that we have in the Sector Secrets Mastery. So as I alluded to earlier, sometime by the end of this month, if not certainly in Q1, I'm going to show you what we've done the last quarter. And when I talk about what we've done the last quarter, I'm talking about alerts in the Sector Secrets Mastery, period. Not other trades, not things that folks haven't seen. My trades are the Sector Secrets trades. My setups are the Sector Secrets setups. I'm not, you can't run parallel lives. If you're looking at a style, you can't, if you're out there thinking, Rog, I'm trying your style, but I'm also doing this other thing. There's too many chefs in the kitchen. Whatever you're cooking is probably not going to be as good as if you followed a single recipe. Yeah. So I would say that the best thing to do is just make your trading life and put the blinders on and just focus on a style. And you can try multiple styles, but make sure you're doing that maybe one style a quarter, one style for the first half of the year, another style for the second half of the year. Because for a lot of traders, especially with as much as we're bombarded with, hey, try this, new indicator, new strategy, we start to turn it into a mishmash. And then what ultimately happens is nothing gets a real shot at being executed in the most clean manner, in the most strict manner as possible. Yeah. So, whatever it may be, you might have different zones of experimenting throughout 2025, but find something that you're going to do in Q1. And I'm going to show you what we've been doing in Q4, what I will continue to do into Q1. Maybe you see if that's something that resonates with you. And here's the other important thing too. When we do that little review, I'm going to share the trades viz with you. What you'll see as we talk about losses and winners, right? A discussion of losses is probably the most important discussion we could have, but most people really don't have the cojones to do it. Heaven forbid people know that I lose. You all know I lose. I share the recap with you all very consistently. I lost in financials, energy, industrials. What else do we have a losing trade in? I'm happy to name them because we're also long Walmart. We're also long Amazon. We're long Amazon again, and we're long XLC. when I take a small loss and I've got those 4 or 5 at this point monster winners, it's no problem. I'll talk about losses all day long because you got to keep them small. So remember, talking about and doing your own review of trades, look at your 3 biggest winners, look at your 3 biggest losers. Your 3 biggest losers should not be anywhere near the size of your 3 biggest winners, because then I promise you, you're not growing your account. Probably the opposite. And these are little things. Again, know what to avoid, know what to look for, and you can navigate this road called trading a whole lot easier. All right. Okay. We have some questions coming in. Awesome. And by the way, if you want to check out what we're doing, sectorsecrets.com. All right. Yeah, we're looking forward to having a good day, D. Bolton. Mr. Anderson, I do not use that particular technique. That's not one that's frankly on my radar at all. And it's a fine technique. And as I mentioned before, if it's something you want to test, great, but I don't use that. So would not know. And by the way, any kind of breakout strategy, Mr. Anderson, any kind of, may I call you Neo? Any kind of breakout strategy is going to be best in a trend. So everything I talk about regarding trends, if you get compression within a trend, you've got a really high probability potential trade there. ADSK, I treat this as chop. JR, I look to buy it in the lower quarter or the lower half of the range. All right, RTY day trading today. GR, so gang, it's 9:13, right? Do I know what my day trades are going to be at 9:13 in the morning on the futures contract? Well, the only way that we could talk about RTY, and thanks for asking about a futures contract, GR. The only way that I could talk about a futures contract is if I talk about what has already triggered, right? Because this is already moving and grooving. We're not waiting for 9:30 on it. This is already a conversation happening. It's a 23-hour-a-day symbol. The last trade that's happened would be this wick at 8:30 into the hourly price movement range, and it's a short sell. That's the last trade that's transpired. After that, we're going to wait for the bell and see what happens. There's no way at 9:14, gang, that we know what the day trades are going to be for the morning, right? But the most recent trigger, you can see right there on my chart, was the red candle up into, gosh, not only the red zone of the hourly price movement range, that's a volatility-based resistance zone, but also the previous session close. And that's a sentiment line. That's a line in the sand. That's what I call it, because there's a mental shift that happens if we cross above it as opposed to remaining below it. And I'd be marginally bearish as the last trade triggered shows. All right, so that's what's going on there on the Russell at the moment, right now. All right, next up is BA and SQ. Okay, let's move this over. Take a look at the daily time frame of Boeing. Boeing has been something I have not been watching in any way through most of the year. And the reason being is hopefully pretty straightforward. Look at the action since January. This is what Boeing's done. It was at about 260 beginning of the year, went down to about 137. This has been a very, very bearish symbol. Now, that said, what about now? Because we trade the right edge, not the left side of the chart. But it's barely getting my attention as far as being bullish. Here's what I would say. Of all the things we can buy, and again, we've got to think about this. Of all the things we could buy, of all the things that if we want to be bullish, I'm presuming you're bullish on Avera. I don't know. But of all the things we could be buying, should it be Boeing? And this is trade this, not that. This is that comparative process. Or would it be buying dips at an already strong name? Amazon, Netflix, right? That's the difference to me. There may be perfectly good buys to be had in Boeing, but very, very much a second tier type consideration, because while we have some nice green candles, so that's great. We've broken the downtrend. We're starting to see bullish price action, bullish participation. It's not, when I'm comparing it to other things I could do, like buy XLC, which we are in the Sector Secrets Mastery, like buying Amazon, which we're in again. That thing was so great. The next time we had an opportunity, we did it again, right? So that's where I say, of the dollars that I could allocate, of the budget that I've got per trade, am I going to dedicate that money? Am I going to put my hard-earned money to work in Boeing, or would it be in Amazon? And it's not that Boeing's bad. It's just going to be beat by the better structure and the higher probability of continuation in not only NASDAQ, but consumer discretionary, and then the Amazon chart. So that's the way I look at Boeing. As far as Square goes, Square is going to benefit a lot from what's been going on with the crypto. This is a nice trend, right? If you're looking for continuation, do you see the difference between being bullish Boeing and being bullish Square? Square, really good stuff. I completely agree. I would put that on a long watch list, wait for a pullback, get long some calls, give yourself at least till January 17 on those. SOUN, it's gone parabolic. Justin, look, I'm not a momentum trader, gang. Most traders are momentum traders. You and I, we're all having a discussion about trends, yes, but pullback buys on trends and never buying into higher highs. Nothing wrong with that. It's just I find that the risk reward is far better on pullback buys. Are there certain advantages to momentum trading? Sure, because if there's no pullback, there's no entry for someone like me. For people who like higher highs, if it continues, great. What I find, though, is the risk reward is tricky at best. A pullback to just under $12 would be a 50% of the last major move. If you want to be a little bit more aggressive than that, you could probably go with a pullback to about $12.30. Those would be the two levels I would look at. I don't know what Sound is doing. I don't know that it's got a liquid option chain. You want to look at the sector it belongs to. This looks like a small cap, which is fine. Look, if you're going to trade small caps, this is actually a really good place to probably wrap up. You're going to trade small caps. Bless you, puppy. My dog's here sneezing. You're allergic to small caps, puppy? Yeah, I think she might be allergic to small caps. She shouldn't be. There's some cool things that are happening. So this is what I tell traders in my Sector Secrets Mastery. If you want to trade small caps, this is where you look. You got to look where there's going to be pretty much a guarantee of attention. Where there's attention, there's flow. Where there's flow, there's follow through. That's the plan. And what I would do is I would focus on the list within FFTY. FFTY is the IBD 50 ETF, right? We can see the weightings, we could see the names in there, and you can see the updates. So this is the way I teach in the Sector Secrets Mastery. We've been doing this for years. If you're not looking at the Russell, if you're not looking at regional banks, look at FFTY. That's where we have this ETF layout ready to go. Update it with that top 10, top 15 names within it. And what you're guaranteed of is eyes on this list, because it's sort of, look, the same way that if something's on Reddit, it's going to have a lot of attention. The same thing goes with the IBD 50 list. It's just guaranteed attention. And that's the way it's been for decades. It's a very popular list. And this would be a great place to start if you want to look at small caps aside from the Russell and aside from regional banks. All right, gang, that's a wrap. Thank you, as always, for being here for Charts and Coffee. I'm here every morning from 9 to 9:20. Get those questions in early, and I will see you tomorrow. Same time, same station.